pleased to welcome you to this special guest lecture, part of our ongoing commitment to providing a global perspective in our academic environment. And today's topic is finance talk from crypto to global shift. And we are especially delighted to you, Dr. Jeffrey, from Massey University, New Zealand, as a distinguished academic and expert in the field of finance and investment. And based on your CV that I already read, uh, your insight is his insight is drawn from both scholarly research and practical experience, and will no doubt offer us valuable perspective on the transformation currently reshaping our world from the rise and volatility of cryptocurrencies. And this is a rare opportunity for actually for our students and also faculty members and all attendees to engage in critical discussion, challenge assumption, and enrich our understanding of this complex financial phenomena. Events like this guest lecture are part of our broader vision of VIA and in UP to nurture globally minded scholars and professionals who are ready to lead in dynamic and interconnected world. And for our student, I encourage you to take full advantages of the decision and please ask questions, be curious, and open your minds to the new idea. The future of finance will be shaped by your generation, and even like these are stepping stones toward that future. We also hope that decision will strengthen our academic ties with Massey University, yeah, opening doors to future collaboration in research and program and student exchange, and let us embrace this opportunity to learn, connect, and grow together between UP and Massey University. Last but not least, I would like to express our deepest appreciation to Dr. Jeffrey and for joining us today, and to all organizer committee who have made this event possible, and may today's discussion inspire us all and may the collaboration between Universitas Brawijaya and Massey University continue to grow. And once again, welcome to today's lecture, and I wish all of you productive and inspiring session. That's all from my speech. Wassalamualaikum warahmatullahi wabarakatuh. Thank you.
Waalaikumsalam warahmatullahi wabarakatuh. We extend our gratitude for their inspiring words to start our event on a high note. Thank you very much, Mr. Arik. Kindly be informed that the attendance form will be provided at the end of today's session. So we encourage all participants to stay until the end and complete the form to confirm your participation. Before we proceed to the main section, we would like to take a moment to present a token of appreciation to Dr. Jeffrey Stengel as a symbol of our gratitude for his presence at today's event. We kindly invite Mr. Arik as the representative from Faculty of Administrative Science to come forward and present the token to Dr. Jeffrey. Thank you very much, Mr. Arik, Dr. Jeffrey, and Dr. Imama. We are truly honored to have you here with us today. Okay, before we begin today's session, allow me to introduce our moderator who will be guiding us through this lecture and discussion. This session will be moderated by Ms. Lion Nafisa Arifin, BBA MSc. She is a lecturer at the Faculty of Administrative Science, Brawijaya University. She earned a bachelor's degree in business administration from Ritsumeikan APU Japan and a master's degree in fintech from Dublin Business School. Prior to her career in academia, she was an auditor at Ernst and Young Indonesia. Her research focuses on fintech development, company valuation, financial modeling projection, and financial literacy and cryptocurrency. She is also active in various international business competition and has won academic achievement awards. And this session will be presented by our distinguished guest, Dr. Jeffrey Stengel. So to both moderator and speaker, the floor is yours.
Yeah, I guess we're gonna need only two minutes. Okay. From here. Okay. I'll be using this microphone. All right. Good morning, ladies and gentlemen. Morning, morning. Okay, I'll be saying hi to everyone across the room and everyone in the Zoom as well. So, welcome to today's special lectures organized by the Department of Business Administrations, Faculty of Administrative Science, University of Brawijaya. And we're delighted for all of you to join us here or virtually in the Zoom on Tuesday, 22nd of April, 2025. All right, from cryptocurrency to global shift, from crypto itself. When we talk about crypto, there'll be a lot of thinkings, there'll be a lot of questions. How is it the price is going up and down? How is it related to the fundamental value? What it has something to do with the goals? And lots of questions that all of us might not be able to answer directly as how we talk about other currencies. And we're very lucky today that we are having distinguished guest speaker who will be answering a lot of questions, who will enlighten us with the cryptocurrency and also the metadata as well. Cryptocurrency, we've seen that it revolving and it's really people talking about the Bitcoin today and the next day, they already talk about other currency as well. They talk about the crash in the market. They talk about what it has something to do with the stocks, what it has something to do with the foreign currency. Where is it stored? How is it transferred? All of those might raise a lot of questions and curiosity. I myself always ask that questions to several experts, and today we are, I guess, very lucky, even if you're in the room or you're in the Zoom, that we have Dr. Jeffrey Stengel from New Zealand coming with us today in Malang, in the middle of us. So Dr. Stengel brings over 25 years of financial service experience to his academic role, having held senior positions in investment banking, corporate banking, and risk management. His expertise spans investment, international finance, corporate lending, asset securitizations. Beyond his academic credentials, he has a practical experience as a financial advisor and consultant to numerous organizations and maintains active industry connections in New Zealand. His research interests include financial risk management, financial literacy, and wealth management. It makes him really suited for today's topic. His research encompasses the interface between academia and the finance sectors. So Dr. Jeffrey research passions lie with building financial capability and improving investor educations. He sits as a founding board member for the Westpac Massey University Financial Education Research Center and chairs of CFA Society New Zealand. He earned his education from University of California, from Bachelor of Art 1989, and then Master of Business Administration from University of California 1991. And he earned his PhD from Massey University in 2012. And again, he is a member of Chartered Financial Analysts since 2009. Okay, so today we'll be having two events. First of all, we'll start with cryptocurrency. We'll look at in depth on how the digital value and the impact in the global economy, how is it related as a digital currency. And following that, we'll be talking about meta trends in financial service. It examines the future and what is the outlook that lies in the future ahead of our financial service. So without further ado, I'd like to invite Dr. Jeffrey Stengel to the podium to begin the first presentations on the cryptocurrency.
Thank you. Terima kasih. Thank you, everybody. And particularly, I'll just take a second to acknowledge the very distinguished faculty here today, my colleagues at Universitas Brawijaya. Thank you very much for hosting me today. Ibu, thank you for your very welcoming introduction. But more than anything, what I would like to do is to acknowledge you, the students, because it's you, the students, who certainly inspire all of us as educators to do our job to help to educate the next generation, for us to be motivated to teach you the skills and thinking required for you to go on and become global leaders, for you to become global business people, the women and men in this room. That's our responsibility, and it's one I'm sure my colleagues here at Universitas Brawijaya, we take very seriously. So it's really my great pleasure to have some time with you students today, and to get to know you a bit and to share with you some of my thinking and some of my research areas to help you to maybe get a bit of a sense of where we find ourselves in today's time and place. And today's time and place we see is a very dynamic time and place to be a business person who is trying to make sense of all the changes that are taking place. And goodness, there's many, right? There are many, many changes. So we'll talk about a couple today. We'll talk about, it's kind of fun. I think the topic, to me at least, it's a bit entertaining, the cryptocurrencies, because it's like being on this fast roller coaster. And it's something that we see over and over again, these type of developments repeat over and over and over. So I'll tell you about cryptocurrencies, but it will be in the context of a pattern that repeats itself throughout history in terms of these periods of volatility, these new fads, that people buy into that ultimately can destroy lives, destroy communities, destroy countries. So we'll talk about that, and then we'll talk about, second part of today, we'll talk about these meta trends. But before I do that, if you will give me just a couple of minutes, the first thing I want to do is tell you a bit more about myself to give you an idea of where I'm coming from. So I live in New Zealand now. I've been in New Zealand since 2002. But before that, I lived in Indonesia. I lived in Indonesia dari tahun 91 sampai 2002 kan? Ya, berarti ya cukup lama ya. Ya, cukup lama. But during that, saya masih bisa bahasa Indonesia sedikit, tetapi tidak begitu lancar seperti dulu ya. Berarti kemungkinan lebih mengerti saya kalau saya pakai Inggris saja sekarang ya. Untuk hari ini aja, bisa? Boleh? Ya, oke. Saya kira juga kamu ya bisa bahasa Inggris ya lebih lancar daripada saya bahasa Indonesia mungkin juga ya. So I'll just speak in English. But I lived here from 1991 and I was a business person. So my background is business and academia. So I lived here from 1991 to 2002, and there was a lot of changes before you were born, lots of changes. And one of the changes that I lived through, amongst others, similar to cryptocurrencies, was the real estate boom. Yeah, some of us in this room old enough remember the real estate boom that led to the global financial crisis, not the global financial crisis, the Asian financial crisis of 1997, 1998. Yeah, so I lived here during that, and waktu itu kursnya rupiah was about 2000, yeah, probably 2000, yeah. Within a period of several months, it went to 15,000, right? Yeah, 15,000. So it was like this roller coaster with cryptocurrencies, and similar to cryptocurrencies at the time, there were other factors as well, certainly, but the driving force of the volatility, which started in Thailand at the time, was the real estate. Everyone was just pumping all their money into real estate, and people thought you just get rich overnight by putting money into real estate, whether it was in Thailand or Vietnam or Indonesia or Malaysia, across Southeast Asia, North Asia. So that's the same thing that's happening now. It's the same thing with many asset markets. And I can go on, I'll talk about cryptocurrency, which then you have the global finance, you have the dot-com bubble, which was 2001. That was another big collapse. Everyone put their money into Cisco, Amazon. I wish I put my money and kept it in Amazon, to be fair. But it was like this roller coaster, right? So then you have, the global financial crisis of 2008, and then so forth, so on. Those of you who are studying finance, this all repeats itself. None of this is new. So you students who are going into the future and will be our future leaders, and I can go back in time when I was your age and mention any other number. So this repeats itself. So when we talk today initially about cryptocurrencies, think about this more broadly. And ultimately, what I like to do when I do a presentation is like this, is I like to give you a map. So you can see where we start. We're going to start here, and we're going to end up here. So you can kind of follow my journey that I'm going to take you on. So I'm going to start by explaining to you what cryptocurrencies are, even though I think most of you already know. I'm going to go on to show you that, that there are other repeating episodes of this type of speculative sort of investments. I'll show you that if you're interested in speculative high-risk investments, that there's other choices. There's many other high-risky things you can put your money in. Why put them in one risky asset when you can put them in others? And then lastly, and from my point of view, the most important part of today's discussion on cryptocurrencies is going to be to bring you back to the basics. Because as global leaders, as educated business leaders, future global entrepreneurs and financiers, it still always comes back to the basics. And the basics aren't necessarily as sexy as some of these other fads, right? Because we'll talk at the very end of the journey I'll take you on today, we'll talk about boring things like risk and return. We'll talk about boring things like diversification. Because as financial managers, those are the pillars of what you will learn. I'll introduce you to Warren Buffett, who is one of the smartest men in Wall Street. How does Warren Buffett make all his money? Sticking to fundamental analysis. He looks at a company's balance sheets. He sees where they get their cash from. He looks at their risk. So this is the journey I'll take you on first. How's that? Is that okay? Yep, okay. So let's get started with that. Okay, so actually I got a slide in here. I've got to tell you, if you don't mind, bear with me one more second. I've got to tell you this, I'll keep it very brief. New Zealand is my new home country, Selandia Baru. Massey University, who I represent, who, by the way, Massey University is very, very, very proud to be working with Universitas Brawijaya on a great program that will allow you students to study at FIAUB and come to New Zealand. And for no other reason, it's a great opportunity for you students to come to New Zealand and study for a short period of time to actually, get a different perspective, to have a different perspective. So this is New Zealand. New Zealand looks as beautiful as this. Massey has these 3 different campuses, Auckland, Palmerston, North Vanuatu. You can talk to me later. I don't want to take a lot of your time today, but look at that beautiful picture. That's exactly what New Zealand looks like. Beautiful. It's like Indonesia. Indonesia's got 13,000 islands, more than 13,000, something like this. But New Zealand's got 2, so we don't have as many. But we're still an island country, right? I live on an island like I lived in Indonesia before. Okay, so those are our camps. I won't spend a lot of time. You guys can talk to we're globally ranked. The finance program, by the way, finance, which is my area. So our finance program at Massey in the world is ranked number 150. So we're quite highly ranked. So that's all I want to say about that. But let's get started on cryptocurrency and getting ready for a wild ride. And that's the thing with cryptocurrencies. Somebody said earlier over here, that's talking briefly about it. It's like, it's up and down and up and down. And like you go to bed at night saying, oh, I've got so much money. I'm super rich. And then you wake up and it's like, whoa, I've got no money left. And it's exactly like that. And I will tell you the story. I'll tell you 2 stories. I like to tell stories. Is that right, Holly? Do I tell lots of stories? This is my colleague over here. She knows I tell too many stories. I'll tell you 2 stories of a friend of mine who's a very well-known professor of finance at University of Auckland. His son Tommy, a couple years ago, he started investing in cryptocurrencies. So he was 20-ish years old, your age. He started out with $5,000 and he put it into cryptocurrencies and he got very lucky. He was going to be a finance student. He wanted to be a finance professor like his famous father, and that was all his future. But he started with $5,000, and that $5,000 of his grew, kept going until he had, this is US dollars, he had over 125,000 US dollars. US dollars, right? It's a lot of money, right? For me, that's a lot of money, right? So Tommy, the son, said to his dad, Dad, I've seen the future, Dad. The future, Dad, is cryptocurrency investing. I'm going to drop out of my studies. I'm not going to go on and do my master's degree or my PhD. As a matter of fact, Dad, I'm not even going to finish my bachelor's degree. I'm going to go to a special school in Europe on crypto investing. Yeah, so he quit. So he jumped on a plane from Selandia Baru and he went on his way to Europe, to Germany. He stopped in America. This is a very true story, sad story, but true. He stopped in America on his trip to Germany. He stopped in California to go hiking in the mountains. And he went hiking in the mountains, but in the mountains in California, there's no cell phone reception, right? So he went into the mountains for a week, having a lovely time. Yeah, couldn't see his cell phone. He came back after about a week and looked at his cell phone. He was thinking he would have $200,000. How much did he have? Posong. Yeah. Telur, burung. Yeah. Nothing. It went, the company that he had trading platform that he had 125,000 went bankrupt. Every cent he had gone. And he called up his dad. Dad, can you help me, Dad? I have no money. Yeah, can you help buy a ticket so I can come home, Dad? Yeah. My son did the same thing, not to that extent. My son worked very, very hard, and he worked for Kentucky Fried Chicken. Yeah, he was the guy putting the chicken in the basket and putting it in, cooking the chicken. Yeah, worked very hard, always hot and sweaty, worked very hard, saved $2,000. And he put all that into cryptocurrency. He said, Dad, I'm going to put this in cryptocurrencies. I said, I think you're not very smart, son. Listen to your dad. This is what I do. Dad, he said, and he did say this, I told the story a bit ago. Dad, you think like an old person. Yeah. Cryptocurrencies is the future, or is it? So a lot of people would say that the future, this is some articles, for cryptocurrencies. You had in one downturn in 2020, November 2022, I think it was at this point, 2021. 2021, overnight, the crypto Bitcoin market went down by 85%. 85%, 85%. So what 85% means is that if you started with $100 at night, you'd end up with $15 in the morning, right? So the cryptocurrencies, you can look at any number, and we'll look later at all these different shockwaves, all the money that gets lost. Can you make money? Can you make money in cryptocurrencies? Absolutely. Absolutely. Can you lose money? Absolutely. Can you, if you know the one thing about investments and finance, this little thing called volatility. In markets, in finance, you will learn, maybe you've already studied, they follow what's called a random walk. What a random walk means is it's not predictable. You can't pick the top, you can't pick the bottom. What people end up doing is they end up buying when the market's high, and they end up selling when the market's low. That happened just last 2 weeks ago, April 2nd, with the announcement of all the tariffs and everything else that is going on, another crazy time. What happens is people panic. People like you guys, they panic. Small investors, they panic, they sell. And what do professional people, global investors, what they normally do is when people overreact and they are selling, they're selling or down here at the bottom, then professional investors are buying and selling back to you at the top, because that's what professional investors do. That's what you should do. That's what you train your mind to do, to look at how markets react. But I love Warren Buffett, I've mentioned before. Warren Buffett's a very smart guy. He's called the sage of Omaha. A sage is somebody who looks in a crystal ball and can divine the future, can look to a crystal ball and see where the markets are going. But Warren Buffett has two rules, and the second rule particularly like, but the first rule is kind of common sense. Warren Buffett's first rule is you don't lose money you invest. Never lose money when you invest. God, that's an easy rule. The second rule is don't forget the first rule. Never lose money, right? Which is kind of stupid, right? But that's him being funny and him being silly, but don't lose money. But the second rule is, and this is one I think is quite relevant, which is what I was just talking about, is be fearful when others are greedy. Be fearful when others are greedy. If the Ojek driver, if the Grab driver is telling you to buy cryptocurrency, when you get on your Ojek or on your Grab, the driver says, buy cryptocurrency. That's the best investment ever. What do? You race home and you sell it. Yeah, you sell it. Because when the market gets greedy and the Ojek and the Grab driver is telling you to buy stocks or cryptocurrencies, the market's overheated. Definitely, right? Yeah, definitely. And that's what happened in the dot-com bubble when that burst in 2001, okay? But then the opposite of that is true. It's called contrarian investing. You've probably heard that. Contrarian investing is when people are greedy, you sell. When people are fearful, you buy. That's right, right? Yeah, that's right. That's like the number one rule of investing. And that's Warren Buffett says that. You know, Richard Branson, you know who that is? He's kind of a character. You want to sell in an up market. So you sell when people are greedy. So that's the idea. But I love this. Something happened here. This next slide says my button's not working all of a sudden. Okay, so we'll have to hang on. Okay, so we'll go back down. Okay, so you know, you've got all of these different failures that does anyone recognize this guy here? Yeah, this is the gentleman Sam Banks, who started up this company called a trading platform called FTX. Has anyone heard of this guy? Not that many years ago, this guy here, this guy right here, he was the Wunderkind. Do you know German? German, Dutch, you should know a little bit. The Wunderkind. Everybody was looking, he was an IT nerd. He wasn't even a finance guy. He was an IT nerd. He started up this company called FTX. FTX was growing to become the biggest trading platform for cryptocurrencies ever. His strategy, Sam's, was to go around the world and vacuuming up, sucking up money from everybody that went into this trading platform, FTX. He was on the front cover of Forbes magazine. He was the Wunderkind. And then some things didn't start making sense. There was some volatility. People started looking in a bit, you know, to his trading platform, and they were seeing things that troubled people, investors, that worried people. So what happened was, and this is always the case, when you have a bubble, the bubble starts, a few people start going to the door, start selling, and then it's like when a run on banks. A couple of people go, and then everyone starts talking, and more and more and more and more and more and more people. Within days, weeks, FTX collapsed. It was done. It was finished. FTX, the cryptos were worth nothing. $18 billion, 18 billion, whoosh, gone. But because people, they follow fads, like they did in real estate, like they did in dot-coms, like they've done in many, many times over history, the tulip bubble crash, you know, they just, it's like gambling, mind Judy, they just gamble, they throw money away. And then when they started looking into it, what happened to the $18 billion? First of all, he was giving a lot of the money to his girlfriend, who had a hedge fund, who was taking more gambles. The hedge fund has nothing to do with the assets that were meant to be held at FTX, the cryptos. He was taking those off the record, off the books, giving them to his girlfriend so she could use it in her hedge fund. He was buying islands in the Bahamas. He was buying big super yachts, but nobody was questioning it. Nobody was questioning him. Nobody questioned where the value creation came from. The value creation. It's all about value creation. It's not about gambling. It's not about poof. It's about value creation. Do you know where Sam is at now? What is the word, the Indonesian word? Penjara. Yeah. So that's where he's at now. He's in jail for many years because he's taking many people's money. Yeah. Okay. But this is the way it always is. And I love this slide here because, as was the case with FTX, this is kind of a rude saying. I'm sorry, it is a bit rude. In NFTs, you get a point, by the way, if you know what NFT stands for. So this is P.T. Barnum. In Indonesia, I know you have circuses, right? Horses, little dogs walking around like this with little skirts on, right? This kind of thing. A lot of mirrors, a lot of smoke. What you see is not the reality. It's it's called mirrors and smoke. It's an illusion. And the gentleman who invented circuses is called P.T. Barnum. So it's Barnum and Bailey Circus. And he invented this back in the 1800s. This is his quote, literally. I will use a better word than sucker. There's a dummy born every minute because it's in the human nature to be greedy. So people will always give you their hard-earned money because if you tell a good story, you can sucker people. Okay, so that's kind of where we're at right now. So this just as a stepping stone to remind us what cryptocurrencies are. Cryptocurrencies are nothing more than a digital record on a series of computers linked together by blockchain technology. There's no tangible asset there. It's in the air, right? It's a digital asset that's linked together by blockchain, a distributed ledger system that has zero value, nothing. Which, as my son would say, and here's a side topic. Well, my son would say, the Indonesia rupiah, US dollar, New Zealand dollar, that's not worth anything anyway. That's called fiat currency. So fiat currency, it used to be that money the governments had to have gold in the bank. Yeah, but now they don't have that. So I guess you could say that even rupiah or dollars or whatever, euros, they don't have any underlying value either. The only difference at this point between, say, a rupiah or dollar is that they've got the backing of the government and the trust that you have in the government that they will maintain, the value. Because even back to 1998, back when the rupiah and banks all over Southeast Asia were collapsing, the governments, Indonesian government, maintained the safety of the Indonesia rupiah, right? So it still had value. The currency was going up and down like this, but the government was still standing behind it. The government protected it. But that's not the case with cryptos that are traded on an exchange, that are really speculative, that are increasingly under government regulations for a very good reason. Because a lot of people get hurt and a lot of people lose money by their investments. In these worthless cryptocurrencies is this thing called volatility that we will be talking more and more about. Because if there is no underlying value, then it's not like supply and demand, right? You guys are economists, you've studied economics. So if there's too much supply, the price goes down. If there's too much demand, the price goes up, right? But cryptos are not, there is the only demand or supply. It's not like even gold. So gold is speculative, right? But gold actually has a function. You need to put gold tips on computer pieces. It's a store of wealth. It's tangible. But things like cryptocurrencies that have no use, it's a quote unquote asset that's digital. So the only supply and demand fundamentally that's created for cryptos is investor sentiment. So if the media is going, oh, if your Grab drivers saying buy cryptos, what happens to demand? Goes up. If the newspapers talk about cryptos, what happens? Goes up. So this is the thing. And I'm looking at these ladies right here because I must say, the one of the things, this is a side topic we'll talk about later today, but you need to have a balance when it comes to managing financial assets. boys tend to be more risky. Yeah, and I look at these ladies here, they seem you look very sensible. And girls, ladies, I'm being general here. You need to have both. But you know, girls don't take the risk, generally speaking, that boys do. So that's where you need to have this balance, and to balance the sentiment, right? To balance the sentiment, to make sure that there's some kind of common sense, you know, that you have with respect to you know, the investments in cryptocurrencies. I love this particular slide here, because to me, this tells the whole story about the sentiment driving the value of cryptocurrencies. So here you've got Bitcoin, Ethereum, Tether, USA Coin, and Binance. If you add up the value of these top 5 cryptocurrencies, if you add them up, and it's even more so today, they add up to over $1 trillion US dollars. $1 trillion. That's a B, that's an M, not an M, but a B with a T. Trillion. You can stack up $100 US dollars. 1 trillion would be almost stacked up all the way to the moon. It's a lot of money. But don't forget what I said, that cryptos have 0 underlying asset value. But people have put their life savings into cryptos totaling over $1 trillion, trillion dollars. Let's put that in perspective. Apple, have you guys heard of this company called Apple Computer? Yeah, you've heard of it, right? Apple Computer makes really cool things. They make iPhones, they make MacBooks, they have these very expensive watches that I can't afford. So they have all these really, really cool things. They have factories, they have assets, they've got employees, they've got brand value, they've got tangibility. To put this in context, the book value of Apple Computers, Apple Corp, is $1 trillion, a little bit more now. It's the same as this. But they've got things you can touch. They've got assets. What the heck? I mean, really? You know, so if you were to describe this as, you know, a bubble, of course, it's a speculative bubble. But now, I've talked about a few asset bubbles. I've talked about the real estate bubble. I didn't talk about the Southern American debt crisis in the 1980s, which I was part of. I didn't talk about the real estate bubble in America that happened in late 1980s that I was involved in as well, 1990. We've talked about the financial crisis. We've talked about dot-com crisis. We talked about all these different crises. But the idea of bubbles goes back many, many years. Back to the Dutch. The Dutch, they probably were selling tulips here in Indonesia, I suspect, back in the day, because the first bubble, I can't even see that slide, my eyes are very bad. That goes back to 1634. When the Dutch were selling tulips. You guys know tulips, right? The flower. They were selling tulips, and similar to Bitcoins, people were trading tulip bulbs. And they went from, you know, some small amount to, you can look at the graph and see that was Dutch guilders. What they went up to in Dutch guilders was huge, because people say, oh, look at that color. That's a black tulip bulb. That's worth this much. This is a orange tulip bulb. That's worth this much. And look at the price. If you look at that graph right there, that is the typical speculative bubble profile of the market reaction and the market overreaction to these asset bubbles. You could take this same graph here and transpose that over the financial crisis of 97, 98, the real estate crisis. You could take this same graph here and transpose it over the dot-com bubble of 2001, et cetera, et cetera, et cetera, et cetera. It's not new. It's the way it is. It's the way of the world. Okay? But now we're talking about kind of logic. So you guys all know that, those of you who have studied finance at all know that there's this little thing. Now we're getting into some finance 101 topics, right? So finance 101. So finance 101, you would learn as first year finance students, there's this thing called risk and return, right? If something is risky, an investment is risky, you need to have a higher return. Why? Because there's a good chance you won't get any money back. So you're taking a gamble, right? So if you look at here, so this is our measure in finance is volatility. So if you look at the log return volatility here for Bitcoin, Ethereum, and the Standard & Poor's Index, the very bottom line is the Standard & Poor's Index, the yellow line. So if you look at the yellow line and compare that with Bitcoin and Ethereum, you'll see, look at the volatility. This is log volatility. Up and down and up and down and up and down. Of course, there was volatility at the start of the COVID outbreak. But if you take out that one period of extremely volatility, uncertainty, the start of March, April of 2020, you look at the volatility of the Bitcoin and Ethereum, look at the difference. Look at the Standard & Poor's 500, the yellow graph. And the yellow graph is investment in the top Standard & Poor's 500 firms. The top firms in America. Okay? So risk and return. So what do you think about that? Risk and return. You can see that based on this graph, that investments in cryptocurrencies is very risky. Okay, but now you say this. You say, yeah, but I'm a risky investor. I like to take chances. I like adrenaline. I'd like to get on my motorcycle, like some of you boys certainly. I get on my motorcycle and then I go zip, 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 because it makes me feel, yeah, like a boy, right? Yeah, like a boy. And sometimes the girls like it as well, right? So you take a lot of risks, okay? But here's the second lesson of finance. Risk and return, yes, risk and return, but then diversification. So you can say that, okay, well, I like risk, but then I would say to you, well, why don't you diversify your risky assets? Diversify the percentage of your portfolio that you put into, maybe you put 10%, 20%, 50% of your investable wealth into risky assets. Okay, that's fine. Everyone's got a different risk profile, right? And different mandate from your, from your client, your investors. Okay, that's fine. But through diversification, you can invest in other risky assets. This is the return of the asset price. There's like an index for the top pieces of art around the world. That's a pretty good return. If you look at the blue line, that's a pretty good return. So why don't you put some money in cryptocurrencies? And why don't you put some of your money into art? Why not? That's tangible. At day's end, if the art market falls down, you maybe would get the collection of the asset and have a nice picture to put on your wall, right? Why not do that? Oil, we all know the price of oil is up and down and up and down. That's a really great, if you're really a speculative, high-risk investor, put your money in oil. You make more return than cryptocurrencies, or as much, right? Oil. And this is my favorite risky asset. I personally invest in the fine wine index. And I do. Why? Well, I like to look at the return on investing in the top bottles of wine, and this Burgundies, that's why the color is red. Look at that. Look at the return you would make on that. That's comparable to cryptocurrencies. But the only difference is that wine is tangible. If you lose all your money, if the price of fine wine, if everyone decides they're going to stop drinking wine and just drink beer and whiskey, and the price of wine goes like that, what do you have left? A bottle of wine. Yes, you can drink your bottle of wine. So it's very tangible, right? At least you got something for it, right? So that's I'm talking about these other risky assets. If you really want to go on a risk adrenaline rush, you can put your investable wealth in NFTs. Now here's the prize. I will give you a prize. I'll share my lovely snack with you. What does NFT stand for? Go, NFT. Non. Yes, you get the prize. I'll share my durian with you. Thank you. So not, but who would invest? These are cartoons. Donald Trump. Donald Trump has his own NFT now that is making billions. The Donald Trump NFT with him as a cowboy. Yeah, with him as a spaceman, a rocket man. People buy this stuff, right? It's like, you know what? I'll save you the problem of purchasing Donald Trump spaceman NFT. Yeah, just give me your money. I think that's better, right? So you've got all these assets that people buy. But here's back to this diversification thing, right? If you diversify, and this, I got to put my glass down here to read. So if you look at the top, if you look at cryptocurrencies, you've got the oil index, you've got the Standard & Poor's index, that doesn't help either, Standard & Poor's index, you've got the real estate index, and then you've got the S&P 500. Those were the top performing asset classes. And if you look at the returns, my eyes aren't this good, I can't see any of this. So it kind of goes, as I recall, from 60% to 35%, right? So those are huge returns for this period of time. If you put your money, if you put an equal weighted asset of weighting in each of these asset classes, 20%, 20%, 20%, 20%, 20%. That's called an equal weighted, asset or portfolio. If all of a sudden cryptocurrencies go down by 85%, you've still got the returns from the other four assets. You're still going to be making approximately, 30% return until cryptos go back up again. That's diversification. When I teach finance to my finance students, my bachelor students, my postgraduate students, my master's students, or my PhD students, it's diversification. This says it all right here. Things go up and down. That's what investing is all about. You don't put all your proverbial eggs into one basket. You mix it around, because if you drop all your eggs in one basket, what do you have? Telur dadar. Yeah? Yeah, scrambled eggs is what you've got, right? Yeah, that's no good. So you don't want to do that. Okay. Okay, but then there will be people, my PhD, by the way, is in something called market timing, asset timing, right? So there's all kinds of strategies on asset timing. And there will be people who say, yeah, Jeff, but I'm a smart guy. I've got a crystal ball. I can pick the top of the market where I'm going to sell. Like here, you look at the Nikkei index, the MSCI, the NASDAQ, Bitcoin, in real estate in the US, gold. Yeah, I'm a smart person. I can pick the top. I'll sell at the top. I'll buy at the bottom. I'll sell at the top. I'll buy at the bottom. That's called asset timing. There's class of investors now. That's what they do for a profession. It's called day traders. Day traders, high volatile traders. They trade. They buy and sell. Buy and sell. Buy and sell. Buy. Failure. I spent 5 years of my life doing my PhD studying this very topic. Market timing doesn't work. Sometimes it works. Yeah, some people get lucky. You roll the dice, someone's going to win, right? But it doesn't work. What tends to happen is you buy at the top and you sell at the bottom. You buy at the top and you sell at the bottom. That's what people do. And you look at the case of Bitcoin. Could you imagine? This is the volatility of Bitcoin over recent years. Could you possibly imagine if you bought at the bottom of each one of these downturns and sold at each one of these upticks. This is the volatility of Bitcoin over the last 10 or something years. Good, you would be the richest person in the world. You would be even richer than Elon Musk. You would have that much money. You would be so rich, you'd be richer than Elon Musk. You could just buy the US presidency outright. Yeah, you could you could certainly become the president because you would have that much money. It would be that easy. But that's not the way it works, okay? So cycles, they repeat each other over and over and over. There's those of you academics, and we'll turn this into a scholarly piece this next minute. There's a gentleman by the name, this is a great book actually. It's by a gentleman by the name of Hyman Minsky. Hyman Minsky, for the faculty in the room, a great economist, Hyman Minsky, who predicted and defined, he's an economist, these cycles right here, this depicted on this graph, that repeat over and over. And he's defined 5 different stages of investments or investor sentiment cycles that they repeat over and over. Hyman Minsky is a great guy. He's a great guy. He's the guy who predicted the GFC. Even though all of his fellow academics thought he was stupid and thought he was a bit eccentric, he was the guy who's predicted these called investor sentiment cycles, and it's specifically related to monetary policy. So it's a very good book, very good read. Because we now know that market timing never works. Market timing is just riding on a roller coaster that ultimately is going to get you nowhere. Okay, so we're almost there. The last bit of this journey so far is to talk about the fundamentals of investment. It's boring, not sexy, something you got to study in class. Your friends are going to think you're stupid. Your colleagues are going to think you're stupid, that you're not timing the market, that you don't really know how to pick a stock. You're not a good stock picker. You know what? Diversification, 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 diversification. You can overweight, okay? So diversification. So you might have, let's say, the stock market might comprise of all the stocks in the Indonesia stock market might be 10% tech stocks. You can overweight tech stocks as a group, not buying a stock, but overweight tech stocks and go 12% and underweight tourism, right? And maybe go underweight, then put more weight into that's what semi-active investors, fund managers do. That's okay. But you don't pick a particular asset. You kind of are still diversified, but you put a little bit of extra focus on a certain asset class. You're still diversified. You're not exposed to what's called unique risk, is idiosyncratic risk. You're not exposed to that. You still got diversification, which helps to balance things out. Okay, diversification, diversification, diversification. This is Warren Buffett. And even Warren Buffett, you know, he goes on about diversification. Even Warren Buffett puts, in this case, 10% of his investable wealth under management into cryptocurrencies. So, is there a place for cryptocurrencies as part of a diversified portfolio? Yeah, of course. It'll give you an extra bounce. It'll make, you know, it'll pick up your overall average return. And if you include cryptocurrencies as part of a well-diversified portfolio, the riskiness of the cryptos will be offset by other risky assets in that same portfolio, and you'll be getting the bounce up of the return as well. So yes, there is a place for cryptocurrency. What we're talking specifically about today is putting all your money, like Tommy, my friend's son, or my son, putting it in one basket. Because then you drop it, you've got scrambled eggs, right? Right? Okay. Okay, so the thing is this, and this is the last bit I will leave you with, and this is a bad comment. So I'm a professional investor. I represent chartered financial analysts. I work very closely with the financial services investment market in New Zealand and globally. It hurts me to say this about my colleagues. You as a small investor, you need to swim at your own risk. What does that mean? It means you might say, oh, it's a lovely day. I think I'll go down to the pantai. Yeah, I'll have a nice day. And yeah, swim around, sunshine. I got my special person with me. Yeah, just enjoying to relax. But what you've always got to remember is there's people like me who are swimming right below the water. You can't see me, you can't hear me, but you'll feel me when I take all your money, because that's what smart investors do. And that's what you might do when you go on to become, investor and fund managers, investment managers yourself. You will take the opportunity. People can be uneducated, but your job as an educated, advanced investment manager is to know this idea of risk and return, know this idea of diversification, know that people respond and they react and they overreact and they take chances. But your job is to actually know how to manage money, not to gamble money, and certainly not to mind Judy, to roll the dice, right? Okay, that's it. Cryptocurrencies. Sorry.
Okay. Yeah. Oh, it's working. All right, thank you very much for the first sessions about cryptocurrencies. I guess we have several questions here, but for the sake of the timekeeping, we'll be keeping up the questions at the end of the sessions. We'll be combining the second session directly for the material. So I guess we'll be hearing from Dr. Jeffrey Stengel for the meta materials for the second sessions. And I guess we'll be having the materials up until 11:50. I guess that's
What time
actually,
is the class over? 11:50.
that is actually 10 minutes ahead of the time. It's actually 11:20. So we'll be hearing presentations around 30 minutes. And then after that, we'll be jumping into the questions and answer for both of the sessions. So if anyone has a questions here in the room or in the Zoom, we'll be keeping up at the end of the sessions. For now, we'll be hearing the second lecture from Dr. Jeffrey again.
Oh, we're gonna take a second lecture right now.
Yes, we'll
Oh.
be combining the questions at the end of
Let's
the
do a
session.
question, because they're probably tired. I would like to hear the questions.
Okay,
Can I
great.
do that?
Yes, we can do that.
Because
Okay.
even though I like to hear my own voice, I get tired of hearing my own voice.
Okay, great. No problems. Then, in that case, we'll be opening the floor for the questions in the room first, and then I'll be going to the Zoom chat. We have nearly 300 audience in the Zoom actually. So if anyone has questions in the Zoom, you can pop it up in the chat. But before that, I'll prioritize the one in the room first. Yes, sir.
Okay, thank you. Assalamualaikum warahmatullahi wabarakatuh. My name is Rizky Ramdan from doctoral program in FIA. My question is, I think it's very interesting when we're talking about crypto, because the crypto adoption in Indonesia is very large because of Gen Z always try to buy Bitcoin and some altcoin. I have some story. When in 2020, when COVID-19 happened in Indonesia, I don't have a lot of money, and I invest in altcoin, buy Dogecoin and then Shiba coin, and then get 10 times 10 times profit or 1000% profit, and then it can help me to get a lot of money when during the COVID. But I think in the future, this is very important when United States, especially Donald Trump, have a executive order to make a Bitcoin strategic reverse. Bitcoin strategic reverse. Bitcoin strategic reserves, I'm sorry. When the Bitcoin strategic reserve, I think international monetary system in the future will be changed because we can buy the property in Bali by using Bitcoin and by using a villa in Bali using USDT, USDC. I think it's very easy because we can send money without a bank because of decentralization system. So, what is your opinion in the future when nation try to adopt a Bitcoin, especially United States and then some countries such as Venezuela, Argentina try to adopt a Bitcoin. And then I think Indonesian government, I think it's very late to adopt a Bitcoin. And then do you believe in Bitcoin? Maybe in the future, Bitcoin will the price will be will achieve 1 million per Bitcoin because in 2011 when I love try to play a video game such as Point Blank, I try to buy some item using Bitcoin. But today I don't have Bitcoin, but I have some altcoins such as XRP, Cardano. I think for hedge my money because in 2024, the end of the 2024, I got a 500% return or profit. I think that is my answer about Bitcoin strategic reserve and then the implication with international monetary system and then Bitcoin or cryptocurrencies adoption in the world. And then especially for company that get or adjust or adoption cryptocurrencies as payment because some countries, especially Indonesia and then China, try to ban a Bitcoin. Okay, thank you.
No, thank you. You had a comment that I'll address first, and then I'll see if I can answer your question. Of course, you always hear the stories like yours that you made 1,000 times return on your investment in Bitcoin. That's common. You know, you said you invested during the COVID crisis of 2020, so obviously you missed the 85% market correction in 2021, right?
Right.
Yeah. I always tell the story of my beloved Nana, my grandmother. Yeah. My Nana loved to go, I grew up in San Francisco. She loved to go to Nevada and play the pokey machines. Yeah. Yeah. She would take the bus every weekend. She would go take the bus, put the money in the pokey machine. And every Monday morning when I saw my Nana back at home, she said, "Oh, I made so much money. I made 1,000% return." Yeah, 1,000% return. I put in $1, I got $1,000 back. Yeah, and that was her story. But she never told you that to get that $1,000 back, she put in $2,000 first. Yeah. She only tells you about the $1,000 she got back. And when my Nana died, bless her, she had zero money. Yeah. But you only ever heard about all the winnings. And that's part of the problem. And maybe you got lucky. I'm not questioning that you didn't get lucky. And some people certainly do get lucky. But on average, people lose a lot of money. You know, there's people making money, losing money. I would just argue at this stage, and this will lead into your question. At this stage, cryptocurrencies do not represent a solid investment because of the riskiness of them. Yes, you can invest in them. Yes, you might make a lot of money. You might have a 10 banger. You might have a 20 banger. Yeah, you might get lucky. You roll the dice, people get lucky, right? That's just the way it works. So that's great that you're making money. Your question then was, will digital currencies replace reserve currencies, now fiat printed currencies? I see, certainly it will. Why wouldn't it? You know, right now, if you go to a country like China, I'll show you right now. Is this there? This right here, I've been, since COVID, the borders were reopened. I carry money in my wallet. I spend probably 2 months every year in China. I took 1, 2, 3, 4, 500 renminbi. It's been in my wallet since 2023. I spend 2 months a year in China. I've never touched it because everything is done digitally, right? So yes, of course, it makes sense that as China's already pretty much got digital, countries, why would they print dollars? But the difference being is that, and what's happening is, number one, if the US dollar goes digital, it's got the regulatory power of the US government monitoring, regulating, you know, the digital asset. Right now, it's like the cowboy days in America. You know, the cowboys, the cowboy days is called the Wild West. You can do anything you want. You could suck up money from all over the world, $18 billion worth, and buy an island and buy a yacht and give the money to your girlfriend, and there's no regulation. So when digital assets become fiat currency, it makes sense, and that will happen. It absolutely will happen. It should happen. It makes more sense. I think particularly, you know, if you look at things like counterfeiting, you know, seemingly there's some, you know, state players, North Korea, for example, that they find it very easy to print fake US dollars. I think it'll be more difficult with blockchain technologies to you know, steal money to have fake currencies. So yeah, it'll happen. It'll definitely happen. Before that happens, there has to be regulations in place. The governments have to figure out how they're going to control the asset. That's happening. Another 10 years from now, 5 years from now. Yep. Makes sense to me. But that's not where we're at right now. Yeah. But even with that, I mean, you look at, there will still be speculation in the market, because if you look at a currency like the New Zealand dollar, the New Zealand dollar turns over about 7 or 8 the turnover in the trade of New Zealand dollars. It turns over 7 or 8 times more than the whole GDP of the New Zealand economy. What does that mean? Well, it means that people are speculating, right? They're speculating. It's not, you're not using the New Zealand dollar to buy milk. They're using it to make money as a speculative investment. So that happens anyway, but it still is controlled, right? Yeah. Good question.
Yeah, in 2020, the altcoin and Dogecoin were very popular in Indonesia as well. And there were a lot of, I'm not sure if that was an investor or speculator were actually born during that COVID. Great. That was really interesting. Okay. Great. Any other questions? Yes, sir.
My name is Brad. I'm a medical student. Some people say Bitcoin is kind of different with any other crypto. Like Bitcoin and crypto is separate. I think we'll agree with your presentation. With most of crypto doesn't have any value. Yeah. But some people say Bitcoin is different. If Bitcoin, even some people say Bitcoin like property because of the limited supply. It's only 21 million Bitcoin and nothing more. As you, what is your opinion about that? That Bitcoin maybe gonna have something very big. Crypto maybe gonna fail, but Bitcoin is something different because so many big people, so many big companies put the Bitcoin on their balance sheet. And what is your advice? Because this is gonna be our thing, next generation in the next future. Thank you.
Well, so your point, I mean, Bitcoin is certainly of any crypto, it is a cryptocurrency and it doesn't have any tangible value. The algorithm, the blockchain algorithm that invented Bitcoin was created by some mysterious Russian who we still don't know who this Russian is. So there is a bit of mystery there. Of all the cryptos, Bitcoin would be certainly the most solid as an investment. But nonetheless, it's still a cryptocurrency that has a tangible value. And if you look at that graph I had up earlier, the volatility is still there. And consequently, you know, it still is very, very much a speculative gamble. Will if any of the cryptocurrencies that ultimately become stabilized or standardized, you know, Bitcoin will probably be at the lead. You know, there's these others that come and go, and you know, the FTX, for example, that trading platform. Yeah, so that's the future. Bitcoins will become standardized. Cryptocurrencies, Bitcoin will be at the lead of the pack. Governments need to regulate and monitor and understand what's going on in the background to properly regulate it to protect consumers. So yeah, it's the future. You're right. Your generation, 10 years from now, everyone will be using, Bitcoin to be making purchases, but it's not happening yet. So we're still a few years away. Yeah. Yeah. I mean, my point isn't to say that cryptocurrencies or any cryptocurrency, Bitcoin, are going away. They're here to stay. But it's very much the Wild West, and it's very much the sentiment that surrounds quote unquote investing in cryptos, Bitcoin, is very speculative. A good friend of mine has lost basically his entire family's wealth, John, in Auckland, investing in Bitcoin, just Bitcoin, because it's addictive. You become a gambler. And the one thing, if you're learning anything in your finance programs, it's like, as a professional investment manager, as a professional investor, you need to detach the emotion. You need to affix the rationality, the understanding, how markets work, how investment management should work. You need to understand the basics. And once you understand the basics, all of these different asset categories, they do have a place in a well-diversified portfolio. And if you're working for a particular client with a particular risk profile that wants to take a bit of risk to grow their portfolio, yeah, of course you'll use cryptocurrencies, but it's in the context of a well-diversified portfolio. That's additional to your question, but I think that's important to say. Yeah.
Great discussions. Any other questions from the group? Yes. Yes, sir. Maybe you can use this portable microphone.
Where's the on off? I don't know. So
Yeah.
oh,
Thank you for your opportunity. My name is Seto Sidumarti from Master of Business Administration via. And I want to ask you about, it is relevant for us to invest in crypto now. As a businessman like you, would it be better to develop your exciting business or invest in crypto and wait for the result, considering we don't have much capital? Thanks a lot.
Thank you. I mean, that's actually an interesting question. How can I answer that? So the question, as I understand it, is basically, as a budding entrepreneur, business person, you've got a business idea, but you don't have the capital to start the business idea. So therefore, you've got a little bit of capital. So therefore, you want to, gamble mind judi to grow the capital that ultimately you can help to grow the business. Is that correct? How can I say this? So, I mean, you need to look at the business similarly. You've learned in your business administration courses, you need to develop a business plan. Part of your business plan, you identify cash flows, you identify your market, you do your market analysis, you identify your cash flows, you associate riskiness with those cash flows, you come up with some projected return, right? Right. Okay, so that's a basic business plan. It's a similar analysis. So investing in a business is similar to investing in any other asset. It's just your own asset. So you have to first of all identify that, and then then the risk. Then it comes down to, in a risk return context, what is going to make more sense: the investment in a company or the investment in some asset. You might say the return is going to be greater with my company, but I don't have the capital modal, so therefore I need to take some gambles. That's a fallacy, right? So what you need to do, it's not one or the other. Part of the problem of your generation, is that, you know, you have to have more patience. The Z generation, your generation, wants everything now. I've started businesses since I was 17 years old. And I had, before I went to university, I had a business, successful business that I sold for, I had it for 11 years. I started really, really small. I worked really, really hard. I didn't take the weekend off. I worked every weekend. I saved every cent I had. I didn't go do a lot of activities. I didn't travel. I accumulated enough modal to where I could start my business. And I knew it would take time. The problem with your analogy is that because you want it all now. So therefore, you're going to take a gamble now, invest in cryptocurrencies so you can have a fast track to investing in your business. The likelihood you'll lose everything, right? So you need to go, yeah, plan. Yeah, plan, slowly, right? You know, slowly, yeah? Go plan, slowly, accumulate your modal. You got some, and then take it a step at a time. And if you've got a company idea, business idea, you can't start like this. You need to, yeah, pick the most profitable aspect of the business. You want to have market entry into this. Totally, you see your market plan is going to have market entry in this whole area here, but there's different elements. Start here, grow your modal, slowly, plan, and then build, take time. Yeah. Sabar dulu. You know this? Yeah. Sabar dulu. Yeah. You need to, take it slowly. Yeah. That's the problem with your generation. Because I've got two children. My daughter's 28, my son's 26. Right? They were born in Indonesia, by the way. They want everything now.
Yeah.
They can't wait, right? Yeah. Slowly.
I guess that reminds
Thanks a
me
lot.
of the phenomenon that happening in 2000. I guess it's 2021 or late 2021 or early 2022. Some of us might be familiar here with the Ghazali effect. Right?
Which effect? The
Ghazali effect, yeah. Maybe some of you guys would like to share the story. What happened back then? So what happened was, right, early that year, there is this phenomenon where there is a teenager who collect his photos for over 5 selfie photos of 4 or 5 years every day, and then he sold it for an NFT, and he made get a lot of money. I can't remember the exact number, but it was millions of 100 millions of rupiah. And then this news spread across the country really quick in social media, in all of the news, and people are getting curious with NFT. And with the economic crisis in Indonesia that happening at that time, people are trying to get an alternative sources of making money.
Yeah.
So people really quickly catching up what is NFT, and they start to sell something that they think might be attractive or valuable as an NFT, and a lot of people got misleading. They start to put their national ID card as an NFT,
As an NFT.
as an NFT, and they can take it back as a blockchain, right? So their whole identity are there in the market, and that's not only 1 or 2 people, but there are hundreds of national ID card are there as an NFT, and some price of the NFT were actually really high, including that Ghazali. The guy's name is Ghazali. So in Indonesian finance at that time, there's a highlight of a Ghazali effect at that time. So I guess that really answering your insight before that people are trying to get a high return in a short time, where that's really a fallacy of finance rules.
Well, and that's why people and smart investors know, or investment managers know, that people don't have the patience to go slowly. They want things now. So therefore, they're willing to take a chance. They're willing to take an unnecessary chance. So therefore, like this effect you're talking about, people need money. People need money during the COVID crisis. So they take risks that they don't normally take. And that's on a bigger topic. A bigger topic right now, one of the topics that we might talk about here shortly, is that because right now a lot of fund managers, investment managers are forced to take risks to get higher returns to cover their their pension liabilities. So right now the world's getting older. So therefore pension funds are needing to pay out more money. And for pension funds to pay out more money, they need to have corresponding returns of their wealth and assets they have under management. But right now, pension funds are very stretched and some are going bankrupt because the money they generate with their wealth doesn't cover the pension liabilities they have to pay out for retired people, like me perhaps. So therefore, they have to take more risks and they have to put investments into asset classes that normally would not be eligible for pension investing. But this is maybe too complicated, where that's going to become very problematic is if with these pension funds that normally have to have a certain safe sort of category of investment, now they have to take more risks to pay for their pension liabilities. So then what happens is these risks, obviously there's going to be losses. So they can have a shrinkage, like General Motors had a shrinkage in there. They had more liabilities for pensions than they could pay. So we're coming to a different point in time where there's going to be, my point, pressure for like pension funds to take risks that they normally wouldn't to cover their costs that then could lead to a big kaboosh. Yeah, does that make sense? Yep. So put some scare in you.
Right.
Yeah.
Yeah, I guess that is really valuable advice. We often heard about some inspirations, I guess. I guess it's more of a lots of young influencer in terms of the investing itself. They showing off how they make much amount of money in a very, very relatively short times. And that's the trend. I can do it, you can do it too. That's kind of the tagline that they're trying to embody into everyone's mind today. And that really, I guess, influencing the way purchasing, selling, and how they navigate their asset as well. And in one way or another, they're also contributing in bringing the crash as well. We hardly hear this kind of advice. We often hear, I can make this much amount of money in a really short time. You should do it too. That's most of the time.
So here's a wizened, mature person's advice to you. I'm a generation. Do you guys know what a baby boomer is? Yeah. That's me, baby boomer. Yeah, that's how old I am, right? Baby boomer. So I'm not a Gen Z. I'm not a Gen Y. I'm a baby boomer. Here's how my secret. I'm going to share with you guys 2 secrets of success coming from a baby boomer. Okay? Number 1, success. You save your money. Save your money. Number 2 success story. Work hard. Work hard. Yeah. And number 3, I guess 3, be patient. Yeah. Save money, work hard, be patient. Automatic, guaranteed success. Yeah.
Thank you very much, Dr. Jeffrey Stengel. Okay, so I guess that would remark the final of the session 1 on cryptocurrency, unless there is any other questions. Right.
Better move. Okay.
Okay. All right. Somebody raise hand in the Zoom. Are we taking one more question? I guess, is that from my class? Okay. Alpha, we can keep the questions at the end of the session too. I promise I'll be back to the Zoom to take your questions. All right. So from this moment on, we'll be hearing the second topic that we'll be learning from Dr. Jeffrey Stengel, which is about meta trends in financial service.
So we need the power. We got the power.
Right.
So how much time do we have? What's our time?
Half an hour will be fine.
So a half hour.
Half hour.
So this should wrap up because that clock's not right. What time is it? So
That is 10 minutes ahead.
okay. So we
That is
should-
actually on purpose to make people come on time. This is the meeting room. Just kidding.
You know, that's actually interesting. I do the same thing in my house. Actually, it's true. I have clocks in my house. I always set the clock 10 minutes ahead, so my wife shows up on time.
Yeah. My room is actually just across the room. I walk on time and then I came here, it's always 10 minutes late. I was like, how can I walk 10 minutes?
So what time do we need to finish? I get this is right. So we got half hour.
We could finish 12:15, 12:20.
So, yeah.
Yeah, should be.
Kurang lebih 30 minute. Yeah, setengah jam. Yep.
Yeah.
Okay, we can do, but we need PowerPoint. Ah. I'll have to get some more. I need coffee. That's what I need more coffee. This is actually normally, I must say, normally, while he finds PowerPoint, no, I've never done a lecture sitting down before. I quite like it. Yeah, it's more it's more relaxing because normally I walk and walk and walk and walk. Ah. So the great disruption. So we're going to start out here, I think, because there's a, this is still working. So basically, the second presentation, we're talking about disruptions in, we're just talking about disruptions in financial services. So this may or may not be of as much interest to you students as perhaps the cryptocurrencies was, but this topic is about some of the trends that are happening. Those of you, how many people in this room, can I see a show of hands? How many people in this room would consider careers in finance, financial services? Students. So how many people are interested in finance as a career? Nobody. So this is going to be a hard sell. Okay, well, listen, then my job is this. So I'll take the challenge. So I asked you the question, how many of you are interested in careers in finance? Nobody put their hand up. But you know what? Actually, I can say, as somebody who has a career in finance myself, it's a very good career choice. And when people think about careers in finance, they think about working at a bank. That's not the case at all. There's a lot of careers in finance. There's financial advice, financial management, investment, wealth, managing the funds of high net worth individuals, working in insurances, working in the background behind some of these digital wallets, all these different sort of fintech products that take place right now. So there's a lot of career paths in finance. And there's some good opportunities. Okay, guys, I lost my students. Now, in New Zealand, when students start losing attention, we do this. Pauline, you can help me. Here we go. You know the one with the students? Okay, so I do. And then you respond. Yeah. So that's to get everyone's attention back. Okay, so everyone's hopefully awake now. Okay, so with financial services, it's actually a really challenging time because there's so much uncertainty. There's so much lack of trust that investors don't know what to do with the cryptocurrencies, with what's going on in financial markets. Generally, financial markets are down about 15-20% over the last 2 weeks. Investors are wondering what in the world's going on. What do they do with their money? This isn't working again. Hello, back here. So there is this sort of complexity. We've already seen what's happened to FTX, $18 billion. We will see what happened with Silicon Valley Bank is another big risk. So Silicon Valley Bank is another great advance. This was a very high-profile bank in Silicon Valley, San Francisco, that lost billions of dollars as well. They had their assets overvalued. So there's a lot of controversy in financial markets. There's a lot of lack of understanding and confidence across the globe with the investment community. And this next slide here is the one that, well, the next one. I think fundamentally what I'll talk about first is what is investment management, okay? What is the purpose of finance? What is the purpose of investment managers, or what's called intermediaries? The purpose is this, and this is critical to you guys in whatever career. So the flow of money, like this gentleman here, is what builds economies. It's what grows individual wealth, but what also grows national wealth. It's what helps drive, investments in companies, in factories, helps people to have good lives. But the thing is that there's this connection between the kind of people, the savers and the users of wealth, and there's these people in between called financial intermediaries, whether it's a bank or an investment house. They don't have the trust that they need to have to grow economies. And one thing that we are taught with chartered financial analysts, my training, is that if you can restore the trust through this intermediation cycle here, that people are going to use their wealth more effectively to help grow the prosperity of everyone. But that's not the case right now. And as a consequence, countries aren't growing. If you think here, even in Indonesia, I don't know, I can't see Indonesia, I don't really know per se, but certain countries, America, there's not a lot of trust. So therefore, people are holding on to their assets and not putting it to the best use possible. So here's to me as a CFA, chartered financial analyst, let me just say to you this, my training. So I've had, besides my university training, which is about 12 years, if you include my PhD study, I've also had 3 years of studying as a CFA with 18 hours of examinations to get that qualification. Out of everything that we're taught as a CFA, the most important thing we're taught is ethical behavior and generating trust. Because look at this graph right here. And this could be the same with any business, those of you who aren't interested per se in finance, of what's called retail investors. People like you guys, you ladies over here, you gentlemen over here. Only 35% of you believe that somebody you give your money to, a bank, will be using your money to help you benefit. More than that, so 65% of small investors believe that, like investment managers like me, are going to use the money that I give them to their own advantage. And as a consequence, the industry is really suffering, right? And to me, the one figure that makes it seem even worse, if you look at that graph, 35%, only 35% of retail investors believe that investment managers are working in their behalf. Of professionals in the industry who know the industry, how it works, even less believe that the industry, institutional investors, are working on the behalf of their investors, their clients. The trust. This is all about trust. I mean, let me ask you a question. Here in Indonesia, right now, again, I've lost touch with the Indonesian market. Do people believe that if I give you, this gentleman here, if I have some money, I'm going to give to you to invest on my behalf, would you believe that money is going to be working for the betterment of the customer, or would you think it's going to be a bit questionable and perhaps it's going to benefit the bank more than me? What is your thinking? The bank. You don't trust, right? That's a problem. That's a really big problem. And if you're going on to have careers in finance or any industry. So this is talking about, the industry of finance, but we talk about where we want to be. Where do we want to be? We want to be up in that upper right corner where the economy and the people of the economy are benefiting. We want to be, working on investors, not too regulated, but not total. If you look at the bottom left-hand corner, you'll see that that's kind of unregulated and the market is a wild market, right? So you want to be up in the upper right-hand corner. You don't be on the upper left or lower bottom right. You want to be in sync. So you want to be working, with government. The industry itself has to be self-regulated. The government has to be working with industry. All of this is at the core of what we're hoping to do to get trust back into the industry. So that's the situation that we're at right now. We're at the point in time that there's not a lot of trust and that we need to rebuild the trust in the industry. Okay, so where do we go next? As professionals, then you and your generation, Generation Z, you need to be recognizing that if you want to have a future in finance, and since apparently none of you are interested in careers in finance, this is relevant to whatever area of business you want to be in. So it's not just specific to finance. So even if you're in retail, even if you're in tourism, even if you're in manufacturing, there's going to be these mega trends that will impact your future success and success that you will have in careers. So what are the mega trends? So the mega trends, people are getting older. And as a consequence, the demographic, change in demographic means that you've got to cater as business leaders, global business leaders, to a different market, to an older market, to baby boomers like me. Okay, so that's important. As business professionals, you need to know that technology, you guys, technology is driving industries. Technology is driving retail. Technology is driving tourism. Technology is driving all these, different sort of sectors, and that you need to embrace technology, both at an individual level and both with organizations, how organizations transact. We talked earlier about blockchain. So what's going to happen with not blockchain, but with digital currencies? What's going to happen when, intermediation with banks is no longer relevant because tech-powered organizations will be trading with each other. They won't be going to BCA. They will be going directly, not through BCA or Bank XM. They'll be coming directly dealing with each other. People who have savings, people who need to borrow money. For your business you're talking about, it'll be direct without any intermediation. Okay, so that's important. We're talking about economic imbalances, which we're talking very much about today. I mean, and this is how it's all changing so fast. You look about economic imbalances, talk about tariffs, that's an economic imbalance, right? So how's that going to impact you? Sorry, my voice is cracking up here. So imbalances, and that's something you have, like, how will that, as future business leaders, how will these new kind of tariffs impact your ability to conduct business? What will you do strategically to counteract those sort of imbalances? Government involvement, resource management, environmental considerations, ESG. So these are all kind of the mega trends that map ultimately, and again, this is finance, but we'll talk about these different scenarios that will impact you one way or the other, whether you're in finance or not. And the scenarios are something called financial technology. Do you guys know what fintech is, those of you non-finance people? Fintech, who can help me out? What does fintech mean? But what does it mean? Give me one example of fintech in your day-to-day life. Is what? Oh, is that the new PayWave that you?
Shopee, over there they have this e-wallet called Shopee Pay.
Shopee Pay. Is that like you can just? So everyone uses that now. So that's like, I don't know it here in India. In China.
Have to pay later.
So like China, I use Alipay.
Right.
Same kind of. So that's fintech, right? So everybody, that's fintech. But again, this is talking about finance. But this is going to change your life and how you do business, how you interact with people. So we'll talk about fintech. We'll talk about parallel worlds. Parallel worlds mean that people are moving together, but not at the same speed. And there's other disruptions that take place that you need to segment. So segment. So you're talking about your business. So you need to segment, you need to work on different, same kind of business ideas, but knowing that people act individually in parallel fashion. So I'm trying to translate this into business for you guys. So rather than having the old days, you would have like a one size fits all, so one product for everybody. But with today's time and place, you can actually recognize the individualism of different market segments. In finance, we talk about having bespoke products for individuals who have different sort of investment requirements. But if you want to talk about this in business generally, is being able to accommodate different segments of the economy of your business that will have different needs that are moving in the same direction, but slightly differently. Okay, so that's something called parallel worlds. Lower for longer, as I mentioned a bit ago, this is purely finance, lower for longer, and this idea of purposeful capitalism. So those of you who are interested in finance, and this is again, fintech has been around for about 10 years. So fintech has been around for 10 years. Everybody, and now you know what people are talking about. Another presentation I do is AI. AI, fintech, same kind of thing. Everyone's saying, oh my God, my job's going to end tomorrow. I won't be working tomorrow. Oh my God, AI is going to take over everything. I might as well go and just stick my head in the hole in the sand and not worry about fintech, AI, same thing. So fintech has been around now for about 10 years, at least. Probably longer. Probably 15, really, started it. Similar to AI. Yes, it's disruptive. Yes, there will be challenges. Yes, there will be changes in how you do your job. In teaching, those of us faculty here as educators, how I do my job is way different than it was 21 years ago. But we have to adapt. And here's my message to you as students. If you adapt, whether it's fintech, whether it's all these other disrupting forces, you will succeed. And not only will you succeed, you will prosper. And the disruptions that take place here in Southeast Asia, particularly, are going to be even more pronounced. Can I tell you a story? I have lots of stories. When I moved to Indonesia in 1991, within a couple years, when I was in Denpasar, where was that? I was Bali. I had my phone number with Telkom was number 19. Number 19 was, I had to wait, it was 019. I had to wait a year to get a landline telephone, 1 year. In the meantime, I got a cell phone, mobile phone. It was about this big. It was about that big. But you know what? I adapted it really quick. Here's my point. Southeast Asia, Indonesia, because you don't have the historic infrastructure like with the landline, Indonesia was the quickest adapter of mobile phones, as it will be fintech, as it will be AI. When I would go back to the United States in the 1990s on holiday, I was shocked at how behind the US was with mobile phones. Nobody had it. There wasn't a system. You would go from San Diego to Los Angeles to San Francisco, which I would do. Everyone had a different phone company. And my phone that worked in San Diego wouldn't work in Los Angeles and certainly wouldn't work in San Francisco. They're all different systems and platforms. It was stupid. It made me mental. And I come back to Indonesia, it's like, oh my God, it's so modern here, right? It's so modern. It's going to be the same thing here with some of these disruptors like fintech or AI, because A, you have a young demographic, B, because you don't have all the legacy infrastructure to get past, there will be huge opportunities for you guys as young business people. You've got to believe that. That's going to be the absolute case. Okay? So these type of disruptions, in fact, are a good thing. Can you believe it? Right now, when you, like my daughter who lives in New York, do you guys know what a check is? A check.
Yeah.
Where you take a piece of paper and you write it, your name in it, you used to have name in it, and you have to, if you pay for the rent,
Right.
you give a check, write out, you give it to the landlord. Landlord has to take the check, go to the bank has to put it in their machine, and then about a week later, the money comes into your bank account, right? In America, they still use today checks. My daughter uses a check to pay for her electric bill. He uses a check to pay for her rent. So you guys are in a really good place. So even though there's disruptions taking place, you guys have already moved past that. So when you talk about fintech and you talk about some of these other sort of disruptors as a meta trend, you're actually probably going to be very, very advanced, and there will be opportunities. And I firmly believe Southeast Asia, particularly now with all the other changes, is going to go whoosh if you embrace the changes, whether it be fintech or other things. So embrace the change, because these new developments, data analytics right now, part of the challenge with growing Indonesian economy is the Indonesian economy has been very much more high labor based, so it's been very labor intensive, heavy machinery manufacturing. But because now through all these other digital advancements, you can connect to the world that easy. So you can connect digitally without shipping, kijang cars across Asia. You'll be the smart economy, because you guys are the smart generation. So whether you're in finance or elsewhere, you will have these sort of opportunities. And what I talked about earlier with the sense of these parallel worlds, you will be able, through a young generation, a hungry generation, with all the advancements upcoming, you will be able to offer products and services, whether it's financial products and services or other products and services, that will appeal to a much bigger market. And as a consequence, you guys are going to be right. I believe I always have had actually the utmost faith in Indonesians to really take charge and to be a booming area, booming economy. Okay. So parallel worlds ties into that, because what happens here? And again, I'm trying to make this relevant for you guys, but those of you who maybe are considering finance, that's look at you guys right here at Universitas Brawijaya. 20 years ago, 30 years ago, Indonesia didn't have the educated population that you have right now. As a consequence, right now, through improved education, access to education, you've got 74,000 students here at Universitas Brawijaya. Improved financial literacy, improved understanding of how markets work, improved understanding of how businesses work with your business training. You're going to have all of these different opportunities, okay? So people will be moving at different speeds, different markets, different demographics, but there's going to be other opportunities that come as a consequence of them, okay? Okay. What are some of the dangers? And we're seeing that right now to tie it into what's happening right now. Diverging worlds are worlds that are anti-globalization right now. So if you look at that second bullet point, that's a diverging world where the worlds were running in parallel. The danger of where we're at right now is that you've got seemingly, potentially, if the current trend continues, this anti-globalization, there's going to be regionalism, there's going to be a lot more uncertainty, there's going to be a lot more potential for conflict, unfortunately. So, I mean, these are some of the things you need to be mindful of and keep an eye on. And as global leaders, I mean, if you talk about this anti-globalism and, you look back, changing the clock back to 30, 40 years ago, will the world be better off with these new feelings of nationalism? No, I would say not, right? So that's going to be a challenge you guys have, certainly, as young business people, okay? Lower for longer, as I mentioned before, lower for longer means that there is going to be, it's going to be more difficult to generate income than historically has been the case. So as a consequence, what's going to happen is there's going to be the potential for greater bubbles. And those of you, everyone in this room is probably too young to really remember any other kind of economic financial bubbles, but that's something that you need to be aware of, this idea that that people are struggling, for returns. So therefore, it's going to have the potential for some sort of market calamity, which sounds really negative. I think the thing is this: there's always you learn from history, right? So all of us have to learn from history. So I would say this to you as future business leaders, as educated young people, Generation Z, you have to learn from history and you can't be turning back the clock. So when you see developments taking place, somebody, hopefully it's your generation, that's going to be saying, stop it. This is not the way forward. In fact, it's the way backward. So this whole idea of lower for longer is going to bring some uncertainties with it. So something to be mindful of. Okay. So this last one here today, I would say purposeful capitalism. So putting this in the context of what you can do as business leaders, it used to be a little bit disturbing to me back in the day, so purposeful capitalism, let's talk about what that means. Purposeful capitalism means using capital, money, or your business ideas for a common good. And does that mean that a common good will not help you grow and profit as a company or as an individual? Of course not. Common goods, as your generation well know, if everybody is growing and prospering, you as a business leader will also grow and prosper. And particularly here, for example, in Indonesia, like say with Bali, Indonesia is one of the most beautiful countries in the world. And Indonesia is a leader now in taking a lot of environmental steps to preserve the beauty that is Indonesia. You're very smart. That's purposeful capitalism. You can make money. You can do good by doing good. So you can make money by doing good. Bali is an example. So Bali right now, single-use plastic bags. Bali is like the golden egg of tourism in Indonesia, correct? Right? So it wasn't that many years ago and I can still remember if I would take a trip to Surabaya or Jakarta, I would land back in Bali, the whole island would be smoke, filled with smoke, not that many years ago, because everybody was using single-use plastic bags. Right now in Bali, maybe the rest of Indonesia, I don't know, single-use plastic bags are outlawed. So when you find Bali now, everyone's not out burning their trash with the black smoke that would cover the whole island. At Ngurah, you couldn't even barely see the runway because it was covered in black smoke. They've solved that problem. So that's purposeful capitalism. Okay, so doing the right thing, doing good, doing right. Okay, so ultimately, through this idea of purposeful capitalism, you have to establish what's called the social operation to license to operate. So you have the ability to run your business just based on doing good for others as well. So the last bit is this, and again, this is not really of great interest to you guys. So investment firms, I would have to say this to you: the last little bit, and this last slide is important. So whatever your business idea is, whatever your career path you have in mind is, you have to understand that the business world is changing. You have to understand there's going to be disruptions. You're going to have to understand that technology is changing. And so what you're going to have to understand, if I would be to leave you with one thing, the firm of the future, the business of the future is going to be reliant on personal skills. It's going to be reliant on soft skills. It's going to be reliant on you guys being the critical conscience, the critical thinkers, and you guys leading the way forward. So how do you do that? You focus on, some of the skills that you'll be learning in addition to your courses, to being a good communicator, to be a critical thinker, to be a collaborator, to be creative in your outlook and envisioning the future, developing your personal brand, because no matter what area you go to, that's what's going to take you into the future, is being who you are, Generation Z, the future leader, and the people who are going to be paying for my retirement. Thank you.
Okay, thank you very much. So now we heard both of the sessions from Dr. Jeffrey Sengel. First of all, we were hearing about cryptocurrency, and then right now we just heard about meta trends in financial services. I'd like to return the questions into the rooms. If there's any questions, yes, from our head of department.
Okay, thank you very much. Doctor, I would like to ask you about the meta trend in financial services that the long-term shift shaping the future of the industry globally, not only talk about financial services itself, but including AI, fintech that you just finished talk about, including decentralized finance, DeFi, and also blockchain. And another thing that we concern about the meta trends in the financial services is just like cyber security and also data privacy. What do you think about that? Before the investor, just like us, we decided to invest. Thank you.
Thank you for your question. As I understand, part of your question is like with the incorporation of AI into fintech, what is that going to mean for several aspects? I guess jobs in general. Is that true? Jobs and careers, and also then with data privacy, with all the data that AI warehouses have access to. So the first question I'll start with is a relatively easy one, I think, although it's somewhat scary. So, will AI impact careers in finance? Yep. AI is a tool, and AI will only impact your career in finance or elsewhere if you don't learn to use the tool. So I use AI every day. I use AI to research and gather information for me every single day. It's a tool. It doesn't stop my critical thinking. So AI will only threaten your career path if you use it as a crutch and not as a tool. If you use it as a tool to enhance your critical thinking and to gather information to make informed decisions that otherwise would have taken some bit of work, to gather all the information. Like I say, I can do like when I update my presentation on tariffs, I'll just say to my ChatGPT, can you give me the latest updates on this aspect, blah, 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 blah. Within 2 seconds, I'll have updates from every corner of the world, on every country, on implications for tariffs. And then I'll say, could you tell me more about tariffs, dairy tariffs in Canada, how that's changed? So it's a tool, it's not a crutch. So if it's here to stay, I still think of the story, and this is analogous. When I did my MBA back in 1990, finance, they had the introduction of an HP programmable calculator that you could actually program all the formulas into to come up with the answers. My professor at the time banned us from using a programmable HP calculator for our exams, our tests. Me, because I was a mature student, I was a bit sassy, we fought it, we took it to the dean. We said, Dean, I'm training to be a finance professional. This is a tool as a finance professional we will be using. Why are we not being allowed to develop our skill in using a tool? Why are we being punished for that now? And the dean agreed. So the dean spoke to the professor and we were allowed to use programmable calculators. It's the same thing with AI. AI is here. It's not going away. Might as well figure out how to use it. If you don't, you're going to get left in the dust. Jobs will change. So jobs will change whether you're in finance or in accountancy. If you look at accountancy, the job of an accountant is a good example. The job of accountants 10 years ago would have been, some little wispy man with a little visor back in an office with an ink blotter and some ledger that went up to here, doing debits and credits, right? And with a little calculator like this, right? That's what accountants did. How bloody boring is that? What a horrible job, really. What accountants do now is they gather up the information from Zero, it's a big accounting platform in New Zealand. They run the information through different routines, process, get different sort of analysis, and then you have a discussion. Here's my point. The role of an accountant now is to have a discussion with a client, understand their needs, their constraints, their objectives, their aspirations. Put that then into the calculator, to the machine, in conjunction with their actual results or their firm or their personal client, get the results come out the other end, and then have a discussion back with the client. So the role of an accountant now isn't a number cruncher. It's really as more of a psychologist, right? A mentor, a trainer, guy. So yes, your roles will change. Yes, IA is here to stay. Will there be more jobs created? I firmly believe that AI will lead to a boom in economies and in jobs, job creation. Will the role of an accountant or a finance person or marketing? My daughter, she's big girl. She was born in Denpasar. She now is living in New York City, New York. She's a marketing professional. She's 28 years old. Her whole day, every day, she's like a marketing analyst. Every day from the time she goes to the office to the time she leaves, AI. That's all she uses. That's all she does. And she has, discussions with her AI platforms. So yeah, it's going to change. Is it more exciting? I think it's more exciting. She thinks it's exciting. She's in New York City, big girl, New York City, big skyscrapers, making lots of money. She loves it. AI is her job. Okay, your question, second question, as I understand, was what about data security? Yeah, so data security is always a big concern. I think the regulators are very concerned with that. They're putting a lot of regulations in place. You've seen it over recent years when you sign on to a quote unquote free app right now. There's a lot of disclosure. You got to tick this box. Yeah, it's a big concern. Definitely a big concern. So that's where the government needs to take a strong role in managing and protecting data privacy. Let me ask you guys a question. Have you guys ever used this app called Google Maps? Yep. Have you ever asked yourself, how does Google Maps know the traffic going from here to Surabaya? How does it know that? Have you ever asked that question? How does Google know? Who can answer that? So one person, who can answer? How does Google know? From your cell phone, right? So when you install Google Maps for free on your cell phone, as you're driving to Surabaya, your phone's going beep, 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 right? So everyone in this room is giving all that metadata to Google to tell the traffic pattern, right? Does anyone in this room use something called Gmail? Gmail's free, right? Oh, that's really good. A free email platform. That's really cool. Take a look at your contract that you signed to install Gmail on your phone. In signing that contract, Gmail looks at every single email you write. You've given it free access to look at every single email you write. Do you ever wonder why you're getting certain advertisements on your Google? Because it's reading your emails. Because you've given it permission to read your emails. Yeah. So that's the concern, I think, in terms of data privacy, that consumers need to be more conscientious as well on the data that they're giving away. There's an old saying back for us baby boomers, there is no free lunch. Yeah, have you heard that saying? There's no free lunch. If someone gives you lunch, yeah, you got to pay for it somehow, right? Yeah. All us older people, we have all this wisdom. Yeah, we know many things. Good question. Thank you.
Thank you very much. Any other questions from the room first? We got a couple questions from the Zoom, but if there is any further questions in the room, I'd like to prioritize the one in the room. Otherwise, we can go to the Zoom. All right. I'll go over the first questions. I guess this was the questions about the crypto before, but we didn't get a chance for the timing before. So the first question from Alpha, his question is, how could be the new tariffs by the Trump and the nowadays trade war affect the cryptocurrency market, particularly in terms of investor sentiment and in your technical analysis? Soon will it be bullish or bearish market? That is the questions from Alpha.
So bullish or bearish market? Well, the market's already very bullish. They're not bullish, bearish. And financial markets dislike one thing more than anything else. Financial markets very much dislike uncertainty. So as a consequence, when there's uncertainty, as there is the case right now with all the tariff, let's call it what it is. It's a tariff, and markets just like uncertainty, so therefore they've already got that 50%. That's given. So then your question is, follow-up question, will that benefit cryptocurrencies, which are already a very speculative, quote unquote, investment? No, of course not. Because when the markets become very uncertain, investors are looking for safe havens, what's called safe havens. What's happened to the price of gold in the last 2 weeks? Yep. Price of gold is at an all-time high. So when investors are uncertain and they think there's too much volatility in the market, they put their money into safe assets that they believe are a place to hide their money, their investable wealth. They buy gold. I had back during the 1980s when there's a lot of volatility in the market. One of my employees, actually, he was buying gold and silver. What did he do with it? He put it in a plastic tube, like a plastic tube for your water. He dropped the gold Krugerrands, they were called back then, put a cap on the bottom. He had a hole digger to, like he put for making fence holes. He dropped it in the ground and he buried it up and he covered it because he felt the whole world was going to collapse. So the question to you is, what happens? Who benefits when there is uncertainty in the markets? Who benefits? How do economies or people benefit when you buy gold, put it in a plastic tube, put it in the ground and bury it? How does that help generate wealth? It doesn't, right? So everybody suffers. That's what's happening now. How about my friend? What happened to him? A couple years later, he went to find his little plastic tubes with gold buried in the backyard. He couldn't find it because the weeds grew over. He had to get a beep, 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 metal detector.
Did he manage to find it?
He didn't manage to find it, but he was very nervous for a while. His wife was very angry with him. I'll remember that. Yeah. Hopefully that answered your question.
Okay. Hopefully that answered question from Alpha. And we got another question from Farrell. Oh, whoa, it's pretty long. Oh, I get.
Where do you read the questions? Let's see.
Okay, so yeah, I'm live on Zoom here. The question from Farrell, I guess you need to charge him for this one because this is really personal advice for finance.
Oh my
The
God.
question is better to invest or buy money, buy more Bitcoin or Solana or meme coins right now because there is a lot of global uncertainty and trade war in the US and a decline in meme coin trend. I have diversified portfolio consists mostly of 50% Bitcoin, 30% Solana, and 20% of infrastructure, AI, etc. I'm a little bit confused. Should I cut my profit now or just wait? And my technical analysis, the market is still bearish or sideways. Plus, there is a lot of volatility and the fear and greed index has been very high lately and absolutely wrecking my portfolio. In what time is the best fundamental to buy more or just wait in your perspective, sir? Thank you for your time.
This is some.
You need to charge him for this one.
Well, this is a very technical question, and this is clearly somebody who does some investing and has some understanding. So I don't know. There's a lot of aspects of that. If I had a crystal ball, I wouldn't be sitting here today. I'd be a very, very rich man. Technical analysis is, I hate to say it, but I'm trying to think of a polite way to say it. Technical analysis doesn't work. Historically, you might be doing well on technical analysis. So if your technical analysis is showing that, that the market is, what did you say, bearish right now based on some Bollinger Bands or something like this that you're talking about. The way Warren Buffett got rich is investing in fundamentals and sticking to a strategy. So if you've got 30% in Bitcoin and 20% in Solarium, you're already very, 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 very overexposed to cryptocurrencies, same class. So I think you're really exposed to a potential downturn with market volatility, which you're already seeing. So I would go back to the basics and I would take your profits, which was part of your question to me. I can't offer financial advice, but if it was my money, I would be going back to some fundamentals, going back to fundamental analysis as opposed to technical analysis, and knowing that the markets through the tariffs, trade wars, as they are rightfully called, is going to lead, I believe, to a major market correction in the next probably 12 months would be my guess. Yep.
Right. Okay, thank you very much. So that was an advice from a CFA holder. So
And it was my personal opinion and not the advice of Massey University or.
Okay, thank you very much, Dr. Jeffrey Stengel. So I guess we, in the past 2 hours, we've been hearing a lot of valuable lessons, and not only lesson, I guess we heard advices as well. I personally, myself, I took notes for my financial well-being as well. And I guess we came to the end of the sessions. For the final remark, we've been hearing that with every trend and evolutions of finance, we'll come back to the basic fundamental value and basic fundamental of finance rules and how is it related into the trend that keep evolving. It will not end here. Okay, so here, I guess it's the end of these sessions. I would like to return to the Master of Ceremony. Thank you very much, everyone, and good afternoon.
Yes. Wow, what an incredible discussion, actually. We truly hope that all of you have gained new knowledge and valuable insights from today's lecture. Thank you, Dr. Jeffrey, for sharing your expertise, Ms. Lain for moderating both sessions so wonderfully, and especially to all participants for your active involvement. Now, we would like to invite the Dean of the Faculty of Administrative Science, Universitas Brawijaya, Professor Drs. Andi Fefta Wijaya, MDA PhD, to present a certificate of appreciation to Dr. Jeffrey Stengel, our esteemed guest for speaker today. So the certificate is on the screen.
Okay, a little speech. Thank you very much, Dr. Jeffrey Steng. So I give a right pronunciation, right? Stengel or
Stengel.
Stengel. Okay. Oh, you have double PhD, doctor and PhD. Oh, double, is it?
But not a single PhD.
Single PhD. Okay.
But it's funny with all those acronyms, my children tell me the most important acronym is D A D.
Oh, okay.
Dad.
Yeah. I see. Thank you very much. We are very glad to hear your lectures, and then this is very good for the academic atmosphere in my faculty. We have students in undergraduate and postgraduate level who enjoy. I note that almost 300 participants join with Daring. Yeah, very big number of students and also lecturer who come here. We have some lecturer here. We have the head of department. We have also Professor Adriani. This is the head of Master Business Administration in the Secretary. We have also Pak Agung PhD, this is also, and Pak Rizky, and some other lecturer here. See, I cannot mention one by one. And we are very glad, we are very happy you are here. This is honors for us that you are here, and this is, I enjoy the lectures, yeah. I hear even not cover all the lecture that you present today, but I keep in the end of the session one a very very interesting explanation about cryptocurrency, yeah, and also the financial services at the second session. Thank you very much, Dr. Jeffrey. I hope that you enjoy to give a lecture here, and then this is our student. This is our future for the next Indonesia. Yeah. Thank you very much. Yeah. Welcome. Yeah. Congratulations. Yeah.
Thank you so much, Professor Andy, and once again, our sincere appreciation to Dr. Jeffrey for the insightful and inspiring session today. Okay, as we come to the end of today's guest lecture, we kindly ask everyone to take a moment to complete the attendance form. The link is displayed on the screen. Please make sure to fill it out before you leave. And now we have come to the final part of our event. I am Felita Delfina as today's Master of Ceremony. I would like to take my leave. I apologize for any mistakes or shortcomings. Wassalamualaikum warahmatullahi wabarakatuh. Have a great day.
Terima kasih Pak. Terima kasih Pak Jeffrey. Terima kasih. Oh, good students. Yeah. Kelas. Iya. Apa? Tidak ada. Okay. Thank you. Okay. Thank you. Okay.
Okay, we kindly ask everyone to take a moment to complete the attendance form. The link is displayed on the screen for the certificate of your participation letter. Thank you.
Foto bersama ya. Mohon maaf, mungkin untuk foto bersama rekan-rekan mahasiswa dengan Pak Jeffrey sebentar di depan situ, gitu ya.
Sakit, nggak boleh di-share. Oke deh. Okay, please make sure everyone to take a moment to complete the attendance form. Please make sure to fill it out before you leave because it is for your certificate of appreciation. Thank you so much.